Let's meet.
Guys, sir will join in another 5 minutes.
Yeah, okay.
Good evening.
Good evening, sir.
Good
Okay.
evening.
Good evening.
Good evening,
Good evening,
sir.
everyone. Good evening. Good evening.
Good evening.
Can you please?
Good evening, sir.
Very good evening. Warm good evening. Actually, it should be warm because outside it's so cold. No, it's raining actually. So yeah. So can we start? All of you, please turn your videos on. Please, please, quick, fast. Yes, so I'm very sorry. There was some confusion in the link, the YouTube link. I mean, the Zoom link. I was trying to log in from a different link, and it's saying that the host will start the meeting. So I'm very sorry for the delay caused. So first of all, wish you all a very happy Varamahalakshmi festival. I know today is the festival where all of us want, right? Everybody want the blessings and the grace of Lord Lakshmi because money, right? Wealth, wealth in the form of knowledge, wealth in the form of health, wealth in its form itself. Everything is needed for everybody. So it's a very nice day and a very auspicious day. So whatever you do today, you will get the benefits more. So start reading Auditing. Yeah, very Chandramoli has read my mind. So I am so selfish. Please do read Audit only today, so it will benefit a lot because we are doing R2E sessions as well. Sorry?
That will be the source of income in future for us. No?
Yeah, that is your bread and butter, idli or dosa. See, we don't eat bread and butter no in India, so we can say idli, dosa, puri, chapati, rice, sambar, whatever you want to tell. You can modify it accordingly. So, can we start? I hope these sessions are helping you. You are able to recall, recollect, and revise whatever we have discussed so far. So, in the last class, we went through one RTP and solved the questions. We understood how to attend an MCQ based question when it is a case study based question, when it is another form of a question, how do we address it? And second one, how do we answer correct or incorrect question? Very importantly, you should not use the word, yesterday I did not mention, but in the class we have already discussed, you should not use the word true or false, yes or no. You have to write correct or incorrect only. See, it does not make much of a difference for you, but the institute says that you have not read the requirement of the question. So it is not just testing whether you know the subject, it is also testing whether you can know and read the question and understand it properly. So that's the requirement. Don't use the word correct or incorrect. Sorry, don't use the word right or wrong. Please use the word correct or incorrect. And reasoning, no, don't write stories. Ramayana, Mahabharata, your stories and all, don't write. It has to be direct, cut to the chase. Brevity is very, very important. Brevity, specificity. So direct, address whatever is the point. Don't write stories. Like if the question is on inherent risk, don't write inherent risk definition, whether that is relevant or not. No, you will not get half a mark here. This is not a regular academic examination. So that's the prime rule. So yesterday we understood one definition, which is applicable financial reporting framework. Actually, in R2E, strangely, we did not discuss the definition audit. Right, first day when you saw me for the very first time. So audit, what do you mean by audit?
Audit is
an independent examination of financial reform of any entity, whether profit-oriented or not, irrespective of its legal size and form. When such
Such
an
an examination is conducted with
conducted
a view
with
to
a view
express
of opinion thereof.
Excellent. I hope that you have said what is right only, because giji was what was happening. So audit is what is an independent examination. So what do you mean by independent? So much we discussed, right? So independence means what? Judgment of a person, not subordinate to the wishes and wellness of a person who is appointing that person. That is the meaning of the term independence. Now independence is in two forms: independence in mind, independence in appearance. What do you mean by independence in mind? You need to act objectively in your approach. It is not how you present it to the outside world. Inside your mind, when nobody is there also, you need to ensure that you are acting independently. That means what your decisions are taken objectively. You are not under anybody's influence. Yes or no? Was I an influence to you in an audit subject? Obviously, no, because you are independent. Your opinion pre-attending audit classes, post-attending audit classes is the same because you are independent. I have failed to influence you that auditing is so nice, auditing is so vibrant in nature. That is your independence in mind. Independence in appearance means what? Whenever you talk to me, you're always so serious, as though you and me are strangers forever, right? So that is independence in appearance. Yes, you are. See, when you go outside, your action speaks a lot. Your action speaks a lot than the words. So your expressions, the expression that you give in class is an indication that whether you're interested, not interested, happy, sad, your expressions, right? So you are saying that you're independent. Are your actions like that? Are your actions directed when a person, when an outsider comes and sees you, is he going to get any impression that you're not independent? That is what you're talking. So you should appear to be independent in all the circumstances. That is independent. Examination. So what is auditing? Auditing is examination, not investigation, right? So what is investigation? It is a in-depth analysis of a particular situation where you start with a suspicious mindset. Under examination, you start with a positive mindset. So the word examination is very, very important. It is not investigation. So you are going to believe that it is the financial statements or the information that is provided to you is right, unless it contradicts with the other evidences that you obtain in the due course of financial information of the entity. So when we talk about audit, we are restricting our scope to what? Financial statements, financial information. So there could be a lot of audit: secretarial audit, cost audit, food security audit, information technology audit. Are we talking about those principles here? No, of the financial information of an entity, irrespective of its size or legal form. Whether you're a small entity, mid-sized entity, or a big entity, does not matter. Audit is compulsory. But if you see certain countries like Singapore or Africa, audit is not mandatory for all entities. Audit is mandatory only for those entities which reach certain threshold. But in India, audit is compulsory. At least if you talk about a company, audit is mandatory. Non-corporates, yes, we have an option here that audit is not mandatory, but it is always suggested to get the books audited. Tomorrow, if they are going to go for a loan, what is the bank going to ask? Please get a certificate from CA. CA cannot certify, though the usage of the word certify is not right. CA cannot say that the financial statements are right unless he has done the audit. So legal form means what? Whether you are a sole proprietor, partnership, charitable organization, trust, whatever be your legal form, audit is compulsory. When such an examination is conducted with a view to express your opinion. So what is the deliverable? You're going to give your opinion. So you're not going to give a certificate, right? So this is drawing a difference between a certificate and an opinion. So what is the difference?
Certificate is 100% assurance.
Very good. Certificate is what? Absolute assurance. Whereas audit is what?
Reasonable
Reasonable assurance. Very good. So, and what is one of the most important differences between a certificate and an opinion?
Opinion is subjective and certificate is it is what it is.
Okay, very good. It is all what it is. It's a fact. Factually, you are certifying whether that statement is right or whether that statement is wrong. That's all. There is no concept of your judgment involved here. 2 + 2 is 4. Whether you're happy, whether you're sad, doesn't matter. 2 + 2 is always 4. But your audit opinion is based on your happiness, right? So Rahul is very happy today. He may give an unmodified opinion. Whereas Pratibha is sad. He may give modified opinion. Skanda is indifferent. He will give disclaimer of opinion. So whatever it is based on your professional judgment. And that's the reason audit or the opinion is true and fair. Certificate is What
Absolutely.
is the phrase? What is the phrase? What is the phrase that you are going to use in the word certificate?
Correct.
Very good. You are correct. True and correct. That is the phrase that we are going to use. So the end objective is what? Giving an opinion. So this itself is drawn in our essay 200, right? What does essay 200 say? Objectives are to obtain reasonable assurance whether the financial statements is prepared in all material respects in accordance with applicable financial reporting framework and are free from material misstatement, whether due to fraud or error. So when will the auditor obtain reasonable assurance?
When you obtain sufficient and appropriate audit evidence.
Very good. When you obtain sufficient and appropriate audit evidence. How will you obtain sufficient and appropriate audit evidence?
By performing audit procedures.
Audit procedure.
Very good. By performing audit procedures. Because we know that there are certain inherent limitations in the audit. Whatever evidence that you are going to get is only conclusive. Right? That's the reason you are going to give reasonable assurance. What? The audit evidence that you obtain is what? Conclusive only, no?
Yes, sir.
Correct, no? What if people are sleeping? Conclusive, right? Hey, what is that smirk on your face, Chandramoli? Why are you smiling? Huh? It is not conclusive, it is persuasive. You know that something is right, but something is not right, but you don't know what is right. Sir, but right and but new tappu. That's also good, no? I know what is not right, but I definitely know this is not right. Right? Uppittu andre sihi irak sadhyane illa. Ad ಚೆನ್ನಾಗಿದೆಯೋ ಇಲ್ವೋ ನಮಗೆ ಗೊತ್ತಿಲ್ಲ, ಬಟ್ ಉಪ್ಪಿಟ್ಟು ಅಂದ್ರೆ ಸಿಹಿ ಅಲ್ಲ, ಕರೆಕ್ಟ್ ಅಲ್ವಾ? ಸಜ್ಜಿಗೆ ಅಂದ್ರೆ ತುಂಬಾ ಖಾರವಾಗಿತ್ತು, ಇವತ್ತು ಸಜ್ಜಿಗೆ ಕೊಟ್ಟು ಪ್ರಸಾದ ಅಂತ ಯಾರು ಹೇಳ್ತಾರ? ನಿಮ್ಮ ಮನ್ಸಿಗೆ ಅಂತ ಹೇಳ್ತಾರೆ ಅಷ್ಟೇ ಅಲ್ವಾ? Correct. No. So, you know, very good. It is persuasive. The audit evidence that you obtain is persuasive and not conclusive. That's why you are going to give reasonable assurance. Understood? And to report on the findings and communicate in accordance with essays. That is what we have discussed. Right? What else? That is the definition of audit. See, the entire concept is revolving only on the definition of audit. Right? So now, what is the scope of audit? What do you mean by scope of audit? What do you mean by scope of audit? Scope of audit andre enu?
It's like a boundary for the auditor.
Very good. Boundary or the coverage. What are the areas that the auditor is going to cover in the audit? So what will he cover? He will form an opinion. To form an opinion, the auditor should be satisfied that the accounting information is reliable and sufficient as the basis for the preparation of financial statements. That means what? He should first satisfy himself that the information is reliable and the information is sufficient. All aspects of the enterprise to be covered. See, when I mean all aspects of the enterprise to be covered, what am I covering? Only the financial information that is relevant to my audit. Yes or no? And then in forming the opinion, the auditor should decide whether relevant information is properly disclosed. Disclosure is very, very crucial. Yes or no? Staff welfare is booked under repairs and maintenance. Audit fee is booked under employee benefit expenses. Sir, yella onde profit, yella onde add agatte. No. See, I am telling profit. I was talking with Chandan the other day. So Chandan was adding apples and banana. I told you cannot add apples and bananas. He says, "Ella one bidi sir fruit salad madkon tindre aitu." He is telling, but you can't. 2 apples, 1 mango. You cannot say app mango, right? It is 2 apples and 1 mango only. So what is that? It is important. You have to cover all the aspects of audit that is relevant to your financial statement, and disclosure is proper, because if you don't disclose, understandability will go for a toss. You need to check whether disclosures are right. The auditor is not expected to perform duties which fall outside the scope of his competence. Can you give an example for this? What does it mean?
Sir, he cannot perform technical tests.
Very good. Very good. Auditor is not expected to determine whether the useful life of a particular asset is 15 years, 20 years. He is not expected to do it. All that he has to do is obtain a report from the third party who could certify could be a chartered engineer. Let's say, for example, percentage of completion of any work. He cannot certify the building completion, right? So he will take a opinion from the third party. So auditor is not expected to do all these things. And also fraud. Auditor is also not expected to do any investigation. If he has identified any fraud in the course of performing his duties as an auditor, you cannot ask the auditor to conduct an investigation and identify the culprit. We don't know. The accountant whom the auditor is talking only may be the culprit. We don't know, right? We are not an expert in determining who the culprit is, right? So it is not required for the auditor to do any activities which falls beyond his scope. So you are telling, sir, the items which come in my scope only we are not doing. How we will be doing the scope which goes outside my competence? But very good. Then what is he supposed to do? Constraints on the scope of the audit that impair the auditor's ability to express an unqualified opinion should be set out in his report. That means what? If you are trying to give a modified opinion, now can I use this comfortably? Now you also know what modified opinion is. Yes. So if an auditor is giving a modified opinion, then he has to provide the reasons why he is giving such modified opinion. Understood? So that is what you have to consider. So scope is very clear. Well, reliability of the accounting information, whether the disclosures are proper, he is not expected to perform any duties which falls beyond his scope or competence. And when he is giving a modified opinion, he should provide a proper basis. An auditor is required to cover all the aspects of the entity pertaining to the financial statements or the financial information. Yes or no? Are you comfortable with this? Okay. Don't worry. This notes will be given. This material, whatever I'm using, will be circulated to you people. So it's not that you have to write everything that is given over there. Okay. Next. Now, what are the principal aspects to be covered in an audit? This is very important. In some of the examinations, they're going to ask simple questions. What are the principal aspects to be covered in the audit? What are the principal aspects that you are required to cover in the audit? Examination of the accounting and system of accounting and internal control. Yes or no? Without accounting, what will you do? Verifying the authenticity and validity of a transaction. Comparison of items of financial statements with the underlying records. Verification of the title, existence and valuation of assets. Verification of liabilities. Checking the results shown by profit and loss. Reporting to the appropriate person or the body. So very simple. Accounting records and the internal control. Then balance sheet, P&L. Balance sheet is expressed in what form? Assets. So verifying whether the assets are properly recorded and disclosed. Liabilities are properly recorded and disclosed. What else are you going to check? You're going to check whether the financial statements agree with the underlying accounting records. Sales register says Pawan is yawning. Right? So sales register says that your sales is 1 crore. The financial statements P&L says sales as 50 lakhs. So it should agree, right? If it is not agreeing, you cannot accept. So the underlying records should match with the financial statements. Rather, the financial statement should be prepared based on the underlying records. What is the underlying record? The trial balance. Trial balance will be the base for the preparation of financial statements. So whether the trial balance agrees and tallies to your general ledgers, subsidiary books is what an auditor is required to perform. Accounting system and internal control. If an entity's internal control is not right, what will he do? He cannot rely on the records or documents that is being generated by the system. Yes or no? Now, what is the purpose of doing audit? What are the benefits? What are the benefits that you are going to get if you do the audit? What are the benefits? This is very simple. Very good.
For government subsidies, we may need audited financial statements.
Okay.
Legal requirement.
Legal requirement to comply with the legal requirements. Very good.
Internal.
It is for taxes, income tax.
It is for taxes. Very good. Helps in settling the tax liabilities. Very good.
Trade disputes.
Reducing trade disputes.
Very good. Reducing the trade disputes, right? Labor unions will go on for a strike that we are not getting bonus properly, even though the entity is making huge profits. But audited financial statements reveal that the entity is under loss. So they will accept, okay, fine, the entity is under loss. This is not the right time for me to take the bonus or the hike. Right? So Germany is under, see, a lot of unrest are happening in Germany. No, they have the flight workers are going on strike because of their wage revision. That is not happening. But they are also going to say that because of the current economy and all those things, we are not in a position to pay. If the audited financial statements are put out, they may come to some financial conclusion that it is not right for me to ask at this juncture. What else?
It acts as a moral check for the employees.
Very good. It acts as a moral check for the employees. Why? The auditor ಬರ್ತಾ ಇದಾರಪ್ಪ ನಾಳೆ ಎಲ್ಲ ಕರೆಕ್ಟ್ ಆಗಿರ್ಬೇಕು, ಎಲ್ಲ ಕರೆಕ್ಟ್ ಆಗಿರಿ, ಡಾಕ್ಯುಮೆಂಟ್ಸ್ ಎಲ್ಲ ನೀಟಾಗಿ ಇಟ್ಟಿರಿ, right? So when we were in schools, no, our teacher used to warn us, today principal is coming for the rounds, behave properly. Yes or no? Then you will start two hands. What is it? Hold your hands, finger on the mouth, kai cut, by much, right? That is what we will do if the principal or the director comes in. Same way, it acts as a moral check. Employees, if the employees know that audit is going to happen tomorrow, if I do anything, they will identify this, right? So it acts as a moral check on the employees. What else?
Weaknesses of internal controls will be identified.
Very good. It helps to identify certain areas of weakness and provide the value addition to the management. See, these are the advantages of you having the audit. But we know that there are certain inherent limitations. Just because I'm doing the audit doesn't mean that I will be able to provide end-to-end compliance, right? So I have certain limitations. What are my limitations?
Nature of financial reporting.
Very good. Yesterday we have discussed. This is revision of revision. R square. This is nature of financial reporting.
Nature of audit.
Nature of audit procedure.
Very good. Nature of audit procedures.
Timeliness of financial reporting and balance between cost and benefit.
Very good.
Other
matters.
Right. The nature of financial reporting means what? The financial statements itself are prepared on the basis of certain estimates and assumptions, right? So it is not going to be an objective evaluation. You cannot, because it is financial statements is embedded with lot of judgments, discretions by the management. If there is a bias in that, auditor cannot identify all the possible management bias which is involved. That is the nature of financial reporting or financial statements. Nature of audit procedures means what? Audit is what? Audit is not an investigation. It is an examination, right? So auditor is not given a power under a law to identify all the frauds or errors in the organization. That is one of the most important aspects. He's going to start with a positive mindset. It is not an official investigation against the wrongdoing, right? Nor is it trained to identify such deficiencies. So this makes the audit procedures inherently having a limitation not to identify all possible errors or fraud. That doesn't mean that audit is not conducted properly. Yes or no? Then the timeliness between of the financial reporting and the balance between benefit and cost. Timeliness means what? Yes, you have to do audit. That doesn't mean that you take years together and perform R&D, right? You can't do that. You have to cover the audit within the time, because 30th September at any cost AGM should happen. Now, if you talk about listed entities, May they have to publish reports. If you see all the listed companies by May, they're ready with their financial statement. So auditors are required to complete their audit within that time. So you need to plan properly. And then what does it mean? Benefit between balance should be CBB, cost benefit analysis, right? CBA. That means what? The cost of implementing a procedure should not be higher than the benefit that you get. We gave an example of income tax department. Income tax revenue collections are 1 crore. Income tax department administration cost is 1.5 crores. What is the use? The government is only sponsoring additional 50 lakh to the employees. It's not going to serve any purpose, right? So there should be some benefit. This does not mean that you can omit an audit procedure. Ayo sir, ivella madidre costly agutte, audit fees ella jaasti, beda bidi, idella ಏನು ಮಾಡೋ ಅವಶ್ಯಕತೆ ಇಲ್ಲ ಅಂತ ಹೇಳಂಗಿಲ್ಲ. This is not a reason for you to omit a particular audit procedure. Yesterday we have seen SA 501. It is not a valid reason for you to say it is impracticable. Sir, they are here, there, I am here. Virtually, I will do physical verification. Everything cannot be done virtually. Yes or no? And then lastly, what certain other subject matters? What are certain other subject matters? Idantu nange ಬೇಜಾರಾಗೋದು. ಕೇಳಿ.
Fraud.
Nana? Okay.
Involving collusion especially.
Okay, very good.
Existence
Going
and completeness of
Related
related party
party
transactions.
relationships.
Occurrence of non-compliance with laws and regulations.
Very good. The occurrence of non-compliance with laws and regulations, right? These are the 4 areas. There are 4 areas. One is SA 240, second one is SA 570, third one is SA 550, and last one is SA 250. These are the points. Can you remember this? Yes, this is very important. And multiple occasions they have asked. I have asked 1,000 times. You have also answered probably 5-6 times. Okay. Next. Now, because we have to do an audit, we need to do it in a proper and a structured manner. Like accounting, if you have to do accounting, what do you need to follow?
Accounting principles.
Accounting principles that are embedded in your accounting standards. Right? When they have standards, why are we less? We also have auditing standards, right? In order to ensure that audit is conducted and audit can be compared. See, if an audit is performed by Anaga and if the audit is performed by R2E, I should compare how these people are doing the audit. Otherwise, too much of power, drunken monkey, we will become, right? Madidde law. ಆನೆ ಓದದ್ದೇ ದಾರಿ ಅವರಿಗೆ ಅವರದೇ ಹಾದಿ ಅಂತ ಬೇರೆ ಒಂದು ಗಾದೆ ಇದೆ. ಸೊ ಅದೆಲ್ಲ ಮಾಡ್ಬಿಡ್ತೀವಿ ನಾವು ಅಂತ. There is some standard. You have to perform audit like this. There is a report. You have to give a report like this, so that everybody who are doing audit, it is comparable. I can monitor whether the work is being conducted properly. So there is some yardstick or a benchmark. That yardstick or benchmark is called standard. Now, this is coming under the aegis of our ICAI. So under ICAI, we have one board, Auditing and Assurance Standard Board, AASB, which is very similar to International Auditing and Assurance Standard Board. Now, that is actually, ICAI is one of the founding members of IFAC. What is IFAC? What is IFAC?
International Federation of
Very good. International
Federation of Accountants.
Very good. International Federation of Accountants. That has constituted International Auditing and Assurance Standard Board. Now, in India, we have drawn the same principles and we have established, ICAI has established a committee and in the form of a board, and that board is Auditing and Assurance Standard Board. This board will constitute experts in the industry, in the profession, and they are going to sit and do a lot of study and they are going to release certain standards. What we have done actually, we have taken international standards on auditing, international standards, and converged it into local requirements. Like how we have IFRS and INDES, we have international auditing standards and we have local auditing standards. That board gives certain standards for the performance. A person, a chartered accountant, I'm not using the word auditor, please be very careful, can provide various services in the form of audit. Right? Audit. He can give assurance. Now, the name of the subject is auditing and assurance. What do you mean by assurance?
Confidence.
Sorry?
Giving confidence.
Very good. Giving confidence, like how I assure you that you will all clear the examinations. Oh, you're laughing. What is this? Joke? You're all going to clear the examination if you put in hard work. It is an assurance that I am giving. Same way, politicians also give us assurance. Right? Assurance means what? Bharosa. Bharosa. Right? So to Hindi words I'm learning daily. So Bharosa is the word that I've learned. So that is what you are going to give as an auditor. So this can be bucketed under 4 main categories. First one is called when you perform audit on the historical financial statements. That means what? A financial statement is already prepared. You are going to perform an audit. So that comes under standards on auditing. So standards on auditing has what? Reasonable assurance as its scope. Now, second, you are going to perform a review. What do you mean by a review? It is not going to go in detail and check the authenticity, veracity of the financial statements and identify the misstatements. But on a broad level, they're going to read the financial statements and see that nothing has come to their attention that it causes them to believe that a misstatement exists. See, I have not independently examined each and everybody who is sitting in this class. I can say that, see, to the extent of the interactions that I have had with them, I can say that these people are good. Nothing has come to mind. That it is, my voice is so horrible. How can nothing has come to me which causes me to say that people are not good? Though some situations have come, that's okay, right? So this here we are giving what? Limited assurance. So that is called standards on review engagement. And then in certain situations, you're going to use certain other assurance. Other assurance means what? It is not an audit, but I will say, or as an auditor, I will say, okay, it's right. This is right. You can believe this. You can trust this particular information. That is called, once again, standards on assurance engagements. And lastly, you may provide certain related services like compilation engagement. Compilation means what? Collection, very good. It's like collecting all the information in a proper and a structured manner. That is called compilation engagement. So you can provide that. That is called standards on related services. Now, each of these standards have numbers and they have names, and it is called coding. Not white hat junior coding. Codification is what we say. We will give certain numbers to it. Right? So it is not like your accounting standard which starts from 1, 2, 3, 4, 5, 6, 7. We have bucketing system here. So from 0 to 100, 200, 100 to 199, 200 to 299, 300 to 399, 400 to 499, 500 to 599. It is 600 to 699, 700 to 799, 800 to 899. That's how the coding is done. But we may not have all the standards. Let's say when I'm saying 400 to 499, that doesn't mean that you have 400 to 499, 1, 2, 3, 4, 5. No. Currently, we have only 2 standards there. That means what? Standards are, there could be a possibility that standards might be implemented there. So what is an indication? The standards might increase. Before they increase, you clear your exams. Otherwise, you have to read that. Understood? See, if you had born a bit early, you could have read Caro 2016. It was only 16 clauses. Because you were late, what has happened? You have to read Caro 2020. Now, even if you defer your examinations, Caro 2020 might be replaced with Caro 2023. That may be more than what Caro 2020 is. So, the ground principle is what? Clear your exams at the earliest. So, now we have 200 series. 100 to 199, there are no standards yet. So we once you clear, we all should come together and we should develop certain standards. Whatever lacuna we have identified, we will establish standards. Now, 200 to 299 talks about your basic principles of audit, which covers your overall objectives. How do you agree to the terms of the engagement? What is your responsibility with respect to fraud? The word is so powerful, no? What is your responsibility when you are doing audit jointly? What are you going to do if you have identified deficiencies in internal control? How are you going to communicate with the people, those charged with governance? And how are you going to respond to the non-compliance of laws and regulations? Now, in order to achieve all these things, you need to properly plan the audit. So next we have 300 to 399 series, which talks about your planning stage, which talks about planning of an audit, your identification and assessment of the risks in an entity by understanding the entity and its environment. And then you have materiality, which is very, very important. And then after doing all these things, you need to respond to it appropriately. Then we talk about 400 series, which is certain specific related standards. For example, 402 talks about if an entity is doing the service organization, what are you going to do? And if you've identified a misstatement, how are you going to evaluate it? That is what it is. The next series are very, very important, which talks about your evidence gathering and collection. 500 series, which talks about various items. It talks about inventory, litigation, segment reporting. How do you perform external confirmation? How are you going to evaluate the estimates and fair value accounting estimates? How are you going to respond to the going concern aspects? What are the checks and balances you need to check on the related parties? If you're auditing the financial statements for the first time, or the financial statements haven't been audited at all, what are you going to do? And once you give an audit report, if something goes wrong, or if you have identified certain information, or once the financial statements have been signed by the board, by the time you sign the audit report, there have been changes which have taken place. What are you going to do? That is what we are going to cover in our 500 series. Then we move to 600 series, which is a specialized standards. If you are using the work of someone else, what are the things that you should keep in mind? It could be another auditor, it could be an internal auditor, it could be an auditor's expert. And lastly, after doing so many things, what are we going to do? Just landed in Kempegowda International Airport. Just sit there in the Buckingham Palace. Right? You are going to communicate. Today festival, a lot of us would have put status, right? Festival, blessed, all those things. What it is important for us to communicate our happiness, our emotions. We're required to communicate what you have identified during the audit in the form of reporting, in the form of expressing opinion. What are you going to, how are you going to express an opinion? If you are expressing an unmodified opinion, if you are expressing a modified opinion, what you are supposed to take into consideration? You want to draw certain, you want to emphasize on certain matters in the financial statements. How are you going to do that? What are key audit matters? All those things are covered under your reporting standards. Now, all these 200 to 799 series are applicable for the audit of historical financial statements prepared in accordance with general purpose framework. What do you mean by general purpose financial reporting framework? What do you mean by general purpose financial reporting framework? GPFRF. Yesterday people didn't say which song I should play. YouTube, no, with the chick music and all we should play in the class when there is a silence. Tell me, what do you mean by general purpose financial reporting framework? Don't pretend as though you are thinking. If you know, you say no. Or if you don't know, tell you don't know, we'll continue. General purpose financial reporting framework means what? A financial reporting framework which is prepared to cater the needs of the general users. Your Schedule 3 for that matter is a general purpose financial reporting framework. It is used by a lot of users. A common user's understanding is taken into consideration when we prepare the financial statements. Whereas a special purpose financial reporting framework is used when it is given for a specific purpose. It could be for a contract. Let's say you are entering into a contract and that person wants the financial statements, or it could be for the group consolidation purposes. Let's say you're a subsidiary entity in India, your holding company is in US. Now it has to consolidate the financial statements. How can they consolidate without having this entity's financial statements proper? So they may ask you to get the financial statements audited in accordance with that laws and regulations. So that becomes your special purpose financial reporting framework, which is covered under your 800 series, which we are not going to discuss. Right? So this talks about your complete standards on auditing. I hope it's okay. Yes. And I also believe that you know the names of the standards. Okay. It's an assertion which can be accepted, is what you have to tell. Now, as an auditor, you are bothered about what? Misstatements. What do you mean by misstatement?
Difference between ACPD of reported items and ACPD of items to be reported in accordance with AFR.
Very good. Difference between
can arise due to fraud
or error, right? So that means what? Amount, classification, presentation, and disclosure. So even if there is a classification difference, that also will be a misstatement. Misstatements can arise from fraud or error. Anything is possible. Understood? So this is what we are going to, this is what we have understood. Now, when you're doing an audit, it's very important for you to have certain fundamental principles. So what are the fundamental principles? So quickly, see, this is a revision class.
Objectivity,
Integrity,
integrity.
Confidentiality.
Professional competence, due care.
Very good.
Professional
Confidentiality,
behavior.
professional behavior.
Very good. Integrity, objectivity, professional competence, and due care. And then
Confidentiality.
And professional behavior.
Professional behavior. Very good. Integrity means what? Being straightforward and honest in your approach. Objectivity means what? Without any bias or preconceived notion. Very good. You are supposed to perform the audit. Confidentiality means what? Very, very important. You cannot share the information that you have acquired in the due course of the audit. Yes or no? You cannot do that. You have to maintain confidentiality at all times. Connect this with the auditor's right with respect to lien. When we talk about company audit, there's a concept called lien, right? So lien means what? Something which has come into your possession in the course of performing the duties. Can you really get into it and then say that it is my document, I will disclose it with everybody? No, confidentiality should be maintained at all times. Here we have also understood, unless required by law or regulation. Let's say tomorrow government agency is asking, you can't say confidential. No, I'll not give. You have to give. But if you are trying to disclose an information, it cannot be disclosed without obtaining the consent of the client. Now here, don't get confused with your working papers. What do you mean by working papers? All the evidences, information, documents which you have collected in the course of audit on which you draw an opinion, the evidences that you have in your file, that is your working paper, also called your documentation. SA 230 clearly says what? Audit documentation is the property of the client.
Auditor.
So
Auditor.
Very good. It is the responsibility, it is the property of the auditor. He may, at his discretion, share the papers, right? So it is left to him. So this also is very important when you are doing an audit, which is assuming that there is a branch auditor. Can you unconditionally ask that branch auditor to share the audit working papers? Obviously, no, you cannot do it because for him, it is his working paper. So it is his right in accordance with SA 230. Now, but confidentiality needs to be maintained at all situations, right? Professional behavior means what? You represent a particular body, behave properly. Professional competence and due care means what? You should have the technical skills to perform the audit. Your accounting skills itself is not right. How do you examine whether the accounting is right? So you have to get equipped with it. Competence means what? You have to get updated with the current affairs. Every day the law is changing. And ever legal changing annual law, you need to develop those skills. These are all the ethical requirements that you have to do. Now, independence is of two types: independence in mind and independence in appearance. The International Ethical Standards Board, right, talks about these principles in detail. Now, what are the threats to your independence?
Self-interest.
Self-interest,
Very good.
threat,
Self-interest.
self-review threat,
Self-review threat,
familiarity,
Self-review threat.
Advocacy threat.
intimidation threat,
Familiarity threats and
Very good.
intimidation.
Very good.
intimidation threat,
Intimidation threat, advocacy threat, and familiarity threats. These are all the threats that you may come across. Very important. They will ask you correct or incorrect question, and they'll give you that this is what it is. But you have to say whether the statement is right or wrong. Advocacy threat, familiarity threat, intimidation threat, self-review threat. These are some of the threats. Since we have threats, what are we supposed to do? We're supposed to put certain safeguards. The principles are very, very important. What are the guiding principles for you to put the safeguards? Very frequently asked question. You need to please keep that in your mind. So now whatever you do, you have to ensure quality is there in the organization. So you need to establish certain quality controls in your organization, which is coming directly from your SQC1. What are the quality control principles that the entity should follow? It is heal me. What is heal me? H talks about human
resources.
E talks about
Ethical
requirements. A talks about
acceptance and continuance of client relationships.
Very good. Acceptance and continuance of client relationships. L talks about
Leadership responsibility.
leadership. M talks about
Monitoring.
Engagement performance.
Very good. Engagement performance. Under each of the category, there are certain points that you need to be aware of. Ethical requirements is what we have already discussed. Under human resources, what are the aspects that is covered? Recruitment, training, hiring process, their promotions, their pay, very, very important, right? And their career development, evaluation, performance evaluation, all those things. Monitoring, what are you going to do? Monitoring, ensure that you comply with the PET. Monitoring means what? You see whether everything is right. PET means what? Professional, ethical, and technical requirements. Whether the firm's quality control procedures have been appropriately applied, that the reports that you are going to give are appropriate in the circumstances. And lastly, follow procedures needs to be there in the organization. These are all the monitoring activities. Yes or no? Then we moved on to understand your audit evidence chapter, right? What do you mean by audit evidence? What do you mean by audit evidence?
The information used by the auditor to arrive at the conclusion on which the auditor's opinion is based.
Very good.
It includes
defined as very good. Please.
It includes both information contained in the accounting records, underlying financial statements and other information.
Very good. That is what you mean by audit evidence. Means the information used by the auditor in arriving at the conclusions on which the auditor's opinion is based. Audit evidence includes both information contained in accounting records, underlying the financial statements and other information. So audit evidence has two limbs. One is sufficiency and the other one is appropriateness. Sufficiency means what? Quality. Right?
Quantity.
Good. Quantity. Sufficiency talks about quantity, how much of audit evidence is required. Appropriateness talks about whether this
Relevance and reliability.
Very good. Relevance and reliability. Sufficiency, yesterday we've already discussed, is affected by MRP. M talks about materiality. R talks about RSMM. P talks about population. Here, size and characteristics of the population. Appropriateness is about the relevance and the reliability. The reliability is influenced by what? Reliability is influenced
nature and source of
very good
evidence obtained.
Source, right? So nature and source is what matters. And then what else did we discuss? Sources, right? So what are the sources of audit evidence? Sources are the places from where you can get the audit information. But that is how we are going to do. How are you going to do it? By performing audit procedures. Audit procedures are divided into two parts. What are they?
Risk assessment procedures and other procedures.
Other audit.
No, further audit procedure, risk assessment procedures and further audit procedures, right? The risk assessment procedures are what? Audit procedures which are aimed to obtain an understanding of the entity and its environment, including entity's internal control, to identify what are the possible misstatements that could be there in financial statements. Risk of material misstatement has two components: inherent risk and control risk. Go together. That is what we call. We don't consider that in isolation. We consider it together. Now, this activity is called RAP. What is the benefit of RAP? What is the outcome of RAP?
Nature, extent, and timing of
further audit.
Very good. Nature, timing, and extent of your further audit procedures. Further audit procedures are further divided into two categories. What are they?
Test of controls and substantive
Control.
Very good. Test of controls, also called compliance
compliance.
procedures.
Substantive
Test of
procedures.
controls aims at what? Aims in understanding whether the controls are able to prevent, detect, correct the misstatements on a timely basis and their operating effectiveness. What are the procedures that you're going to use there? You're going to mainly use inspection and inquiry as the audit procedure, right? Then further audit procedures are divided. I mean, the substantive procedures are divided into two parts. First aspect is called test of
details and
analytical procedures.
Very good. Analytical procedures. Test of details are further divided into test of transactions,
test of balances,
test of transaction is called vouching. Test of balance
verification.
Sorry, I'm very sorry. Test of balances is called verification. And then the analytical procedures are what? It is a plausible relationship between the financial and non-financial data, and thereby you're going to make certain analysis. That is what we talk about. Analytical procedures called substantive analytical procedures. Why you can also perform analytical procedures as your RAP. Clear? Now, how do you obtain evidence? You are going to use certain techniques. These are called audit techniques. What are the techniques? Inspection. Inspection is with the examination of the documents. When you're verifying documents, you call it as inspection. Inquiry means what? Asking questions from the knowledgeable person and obtaining the evidence from them. Inquiries, external confirmation, most reliable audit evidence. Then recomputation, you're going to recompute it. Reperformance, a procedure, you're going to perform it again. Then analytical procedures. What else are you going to do?
Observation.
Observation, very good. If you're observing process, you're trying to understand a process, how are you going to do it? You see it through your eyes. These are your audit procedures. Understood? Also called audit techniques. I use the word procedures, but techniques is what you can use. Now, the reliability of audit evidence is increased or it is affected by aspects. What are they? There is
it is a original document.
I2E, E2E, I2E, right? That relationship. The reliability of audit evidence increases when it is obtained obtained from the external sources. The reliability of the audit evidence increases when it is obtained directly by the auditor. The reliability of the audit evidence increases when it is obtained from the original documents than the photocopied ones. Yes or no? The reliability will increase more in the respect of documentary evidence than oral evidences. You always want to have it in writing so that it forms a basis, and then the reliability is going to increase when the controls with respect to the preparation are effective, right? So when we talk about reliability, you need to also understand the nature. Nature means what? Oral, visual, or documentary. Oral means what? Something which it is given orally. Documentary means what? In the form of statements. Visual means what? Something that you see. For example, your inventory verification process is a visual evidence. It is not a documentary evidence nor an oral evidence. Inquiries are your oral evidences. Most of your audit evidences, let's say computation, depreciation, these are all documentary. And it is also based on source. Source means what? Where it is emanating from, internal or external. Internal is least reliable, external is highly reliable. Understood? Now, in this process of doing audit, sometimes you may not be able to obtain the evidences directly. What is the last resort? The last resort is your written representation. What do you mean by written representations? It is a written statement by the auditor to the management.
By the management provided to the auditor to confirm certain matters or to support other audit evidence.
Very good. That is your written representation. It is given by the management to the auditor, not the other way around. The other way around is called what?
Management letter.
Very good. Management letter. Now, written representations does not constitute a sufficient and appropriate audit evidence. It is only for your comfort. It is only for you to satisfy that procedure is followed, but it will never absorb your liability. That needs to be taken into consideration. So you can obtain written representations from those charged with governance, but you will not obtain this more from your TCWG because they will not be involved in day-to-day operations, but rather you would obtain it mainly from the management. Sometimes you may be required to obtain written representations from the other parties. For example, in-house legal counsel, the engineers of the organization, or any person who is having that subject matter knowledge. They have to provide that representation, right? And then what are the objectives in written representations? To obtain written representations which supports the other audit evidence. See, the audit evidence that you have already collected should support. What is the other word that we are going to use when it supports or when it links? There's one specific word that we use. Very good. Corroborative. Not collaborative, corroborative audit evidence, right? So that is what you're going to do and respond appropriately. Yes or no? Then we understood external confirmation as an audit procedure. I know I'm going too fast because we have to cover all these aspects, right? So external confirm. Are you able to remember? Idella class?
Yes, sir.
Nothing. Everything is old only.
No, sir.
External confirmations are what? Obtaining the confirmation from the third parties directly. So it is a tripartite arrangement. The client should initiate the confirmation, and the responding party, also called confirming party, should directly respond that to the auditor. Right? In Satyam's case, that didn't happen. The bank confirmation came to the client distorted the message, and it went on to the auditors, and auditors relied on that. That's where the question started. How can you rely? SA 505 is not followed. Now, you can normally confirmation of balances is addressed to which type of assertion?
Account balances.
Very good. It is addressed to the account balances assertion, but it doesn't mean that you can't apply it for others. You can apply even for class of transactions. Examples are what? Confirming the transaction value itself. Let's say when you obtain bank confirmation, you obtain two things. One, balance confirmation and interest confirmation. When you are taking interest confirmation, what are you trying to do? You're trying to test the class of transactions. Right? External confirmations are normally given in two forms. What are they? One, in the form of
positive and negative.
positive confirmation and negative confirmation. What do you mean by positive confirmation?
Positive
Third
in
party
both the
response.
cases, we will receive the reply. In negative, only when it doesn't match, we will receive the.
Very good. So, under a positive confirmation request, the auditors would ask the confirming party to confirm the balance irrespective of whether the balances are right or wrong. But under a negative confirmation, they ask the corresponding party to confirm only when the balance or only when the matter does not match or does not tally. So which is more risky? Negative confirmation is more risky. So when will the auditor decide to perform negative confirmation request?
Or least.
When he doesn't rely much upon it.
Or very good, when the auditor does not rely much on the external confirmation, he is relying on certain other audit procedures. He may choose to perform negative confirmation when the auditor's assessment of the risk of material misstatement is lower. If the auditor feels that this area is highly risky, then will he go for a negative confirmation? No, he will go for a positive confirmation. So you need to address appropriately. Now there is one concept called non-response. When is this non-response applicable?
Positive confirmation.
Very good. Non-response is applicable only in a positive confirmation. Why? Because only in a negative confirmation, he will respond if it is not right. So you cannot say if he is not responded, it constitutes a non-response. So it's only in the positive confirmation, it is going to be a matter. Now, what are the factors that you are going to consider when you design the confirmation request? You're going to understand the specific identified risk of material misstatement. So if the risk of material misstatement is higher, you would perform more and more confirmation of the balances to obtain reliable audit evidence. The format in which the confirmation letter is drafted, right? Because it is all based on how it is being addressed to and the mode of communication that you want to convey it, whether it's in an electronic form, whether it's in the paper form, matters. And then prior experience that you have had in this particular organization, how the clients respond to the confirmation. These people don't respond, they don't give a damn. If that's the case, you need to perform something else, right? And then management's authorization. See, it's always when management takes this interest, whether management is proactively responding to the requests. Management should say, yes, I will send the confirmation request, because without them initiating, you cannot directly have interactions with the client. Client's client, understand, right? Customers are the vendors of the client. So then, and the ability of the intending party, if I send this request, will he respond to it, is what we need to take into consideration. See, confirmation of balances gives a reliable evidence, but in some cases you need to consider it more skeptically. What are the situations?
Related party.
Very good. When the confirmations are received from the related parties, though it matches, you need to always ensure, because there is always a concept of influence there. When the integrity of the confirming party is known to the auditor, then you need to ensure that it is properly addressed or taken into consideration. These are the points. Now, if the management is refusing you to send the confirmation request, what are you going to do?
Ask for the specific
Inquire for the
reasons.
reasons of refusal.
Very good. Ask the reasons for such refusal.
If it's a valid reason, then perform other alternate.
Very good. Evaluate whether the reasons are justifiable reasons. So you have to obtain sufficient and appropriate audit evidence on the justification, that the management's reason for such refusal is justifiable in fact, in light of the facts and circumstances. And then if the management's reasons are justifiable, what are you going to do? You're going to perform
Alternative
Alternative
audit
procedures designed to obtain
evidence, alternate audit procedures, right? Now, if the auditor is unable to perform alternate audit procedures, what is he going to do?
Communicate with those charged with governance and modify the opinion.
Very good. Communicate with those charged with governance and the management on the aspect which is given in this case. And don't just modify, consider the implication on your audit. whether it is material or pervasive, material and pervasive, what is this? And then consider to modify in accordance with SA 705. This is what you're going to do. Now, what else are you going to consider in an external confirmation? Determine what information you need to obtain as a balance confirmation. Select the parties. That means what? You're going to do sampling procedure over there and then design the confirmation request and send out it to the confirming party. Just by sending out, it will not happen. What does
Follow up.
Very good. Follow up. Very, very comfortable. Like how I follow up with you. Whether have you read? Have you read? Have you read?
Yes,
Have
sir.
you written? Have you written? Same way you have to do there also. This gets our SA 505 completed. So then what did we discuss? We discussed SA 530, one of the most important standards, right? So what is 530?
Audit sampling.
Audit sampling. What do you mean by audit sampling? What do you mean by audit sampling? Fast.
Application of audit procedures to less than 100.
Very good. The application of audit procedures to less than 100% of the population of the audit relevance is called audit sampling, right? So audit sampling, since you're not applying 100% of the audit procedures, you have this risk. What is that risk called?
Sampling risk.
Sampling risk.
Risk.
Sir, you are not.
What do you mean by sampling risk?
The risk that the
conclusion
auditor's
based on the
conclusion based
sample
on
may be
sample
differ from the
may be
conclusion of
may not be
entire population.
same when the entire population was subjected to the same audit procedure. It leads
Very
to
good.
error.
It leads to two erroneous conclusions. What is the sampling risk? That the risk that the audit conclusions would have been different if the entire population were subjected to same audit procedure. Now, audit sampling leads to two erroneous conclusions. Now, here we divide our procedures into two parts. One is compliance procedure, substantive procedures. Compliance procedure is called test of details. Substantive procedures are called, test of controls. Substantive procedures are called test of details. Now, what is the word that we are going to use for test of controls? Deviation. What is the word that we are going to use for test of details?
Misstatement.
Now, what are the two erroneous conclusions? One, it could affect your audit efficiency or it could affect your audit effectiveness. Effectiveness means what? In the case of test of controls, the controls are not the controls are operating effectively when in fact it does not. That means what? You're saying controls are right, but it is not right actually. In the case of test of details, a misstatement does not exist when in fact it does. This leads to audit effectiveness. Why? Because it is leading towards giving an inappropriate opinion. This is very dangerous. Under efficiency, what happens in the case of test of controls? A deviation exists when in fact it does not. And in the case of test of details, a misstatement exists when in fact it does not. This leads to efficiency because auditor is required to perform more and more audit procedures to establish the fact that his initial conclusions were not right. This is what we discussed. And what else did we discuss there? Anomaly. What do you mean by anomaly? Clock sound ಕೇಳಿಸ್ತಾರೆ ಭಯ ಆಗತ್ತೆ ನಂಗೆ ಹೇಳಿಲ್ಲ ಅಂದ್ರೆ ಆನ್ಸರ್.
Exception.
Very good. It is like an exception, a misstatement or a deviation which is demonstrably not the representative of the population. Like an exception. You are identifying a misstatement which is exceptional in nature. Why anomaly is important? Very importantly, under audit sampling, what are you going to do? You're going to project how the population is. Right? When you're projecting, you are supposed to eliminate this anomaly. Yes or no? So that's why we say, what is auditor's best estimate? What is auditor's best estimate of misstatement? What is auditor's best estimate of misstatement? Projected misstatement plus anomalous misstatement is equal to auditor's best estimate of misstatement. See, you take a sample of 50 units. Out of these 50 units, you identify 5 misstatements. Now, if you have identified 5 misstatements in these 50 units, what could be the proportion or the magnitude of misstatement in the entire population? You're going to project. Out of these 5 misstatements, if you identify one misstatement which is an exceptional nature, which is an anomalous misstatement. When you project, you take out this one and then project that on this 20, 4 are the misstatements. On 100, what could be the misstatements? Example. But to qualify whether it becomes an anomaly, you need to obtain sufficient and appropriate evidence. When you're saying it is an anomaly, you need to be very, very careful. Then under the sampling, we have the procedures. What are the procedures that we have? Audit, sample, design, then sample size, then sample selection, methodologies, then projecting the misstatements, then evaluating those misstatements, and then concluding. And finally, examining the reasons for such deviation. Now, sample design means what? It talks about the entire structure of your sampling. It is affected by the materiality, size, and the nature of the entity, the complexity involved, the auditor's risk assessment procedures. All these things matters. Now, sample size. What do you mean by sample size? It talks about how much of the samples I need to take. This is based on various factors. Now we divide it into two parts. For tests of controls, we have certain points. For test of details, we have certain points. What are the points that we have discussed? First, for test of controls, the auditor assessment takes into consideration the element of internal controls. What will happen to the sample size?
Decrease.
Sample size will increase or decrease. Don't say decrease.
Decrease.
It will decrease. No, it will increase, no, because auditor's expectation takes into consideration the element of internal controls. That means what he wants to rely on the controls, then the sample size will increase, right? There we have understood two important terms: projected misstatements, tolerable rate of deviation and tolerable misstatement. What do you mean by tolerable rate of deviation? What do you mean by tolerable rate of deviation? Generally, what do you understand?
Performance materiality.
Very good. It is the performance materiality for a particular sample in respect of a control. Tolerable misstatement means what? Sorry, tolerable misstatement means what? Okay, right. Tolerable misstatement means what? The amount or amounts set by the auditor at what levels? At a level where he requests, where he intends to obtain appropriate level of assurance that the monetary amount set by the auditor is not exceeded by the actual amount of misstatement in the population. It's very simple. That auditor will be okay to have misstatements. To what extent is he okay to have that misstatement? Rate of deviation means what? It is for a control. To what extent the auditor expects or is okay to have deviations in the control. That's why we say it is like a performance materiality for a sample. Understood? See, definitions are very, very important. Now, what is the other factor that is going to have an impact in the case of test of control? An increase in the tolerable rate of deviation. What happens to the sample size?
Decreases.
Decreases.
Will decrease. Why? Because you're okay to have more and more errors in the controls. Then an increase in the expected rate of deviation. What happens to the
Increases.
Increases.
It increases. Why? Because you see that there are a lot of deviations. That means you already know that there is a problem. So what do? You're going to do more and more audit procedures. You're going to select more and more internal control samples. Increase in the auditor's desired level of assurance that the tolerable rate of deviation is not exceeded by the actual rate of deviation. So what happens to the sample size?
Increases.
It increases. We discussed desired level of assurance is like 1 minus tolerable rate of deviation. Auditor is okay to have 5% misstatements means what? He wants at least 95% of the items to be correct. Understood? So that is what we have discussed. Then increase in the sampling units.
Negligible effect.
Negligible effect.
That's why we use the word sampling. The beauty of sampling is that if the population is increasing, the sample size may not increase proportionately. The impact is very, very negligible. Understood? So same way we have certain factors for the test of details. What is the factor? Increase in the auditor's assessment of risk of material misstatement. What happens to the sample size?
Decreases.
Increases.
If an auditor identifies that the risk of material misstatement is higher with respect to revenue, will he take lesser samples or more samples?
More samples.
More, right? Don't get confused. It's very tricky. Please understand the situation carefully. Then auditors, in the use of other audit procedures, the auditor intends to use other substantive procedures. What happens to the sample size?
Decreases.
Sample size decrease. Very good. He's using a nice tool. Increase, decrease tool. Very nice, actually. Very innovative way. Right? It is going to decrease. Why? Because he's not relying on sampling technique. He's relying on some other technique. Next, increase in the auditor's desired level of assurance that the tolerable misstatement is not exceeding the actual misstatement. Increase in the auditor's desired level of assurance that the tolerable. It will increase or decrease?
Increase.
It will increase. Why? Because he wants to take more comfort. When will he get more comfort? When he has tested more. Increase in the tolerable misstatement?
Decrease the sample.
Increase.
Increase. Decrease. Increase plus decrease by 2. It will decrease. If your tolerable misstatement is higher, that means what? You're okay to tolerate too many nonsense, you will do lesser work. That's the simple logic. And then increase in the sampling units. Negligible effect. And then lastly, increase in the amount of misstatement that the auditor expects to have in the population.
Increases.
It increases. Why? Auditor is expecting a lot of mistakes to be there in this population. So he will do more and more procedures to ensure that misstatements are identified. Right? Now, then what do we have? We have sample selection methodologies. What are the sample selection methods?
Random sampling.
Block
sampling are 2 types. Random sampling are 2 types. What are they?
Simple and
stratified.
Simple and
Stratified.
Simple and stratified, right? So random sampling means what? You are going to select a particular sample without any preconceived idea, objective criteria. Just like that, you're going to select. Now you're going to use random numbers here. There is something called random number table that you're going to generally use for selecting the samples. Then we have systematic sampling. What do you mean? Okay, stratified sampling. When will we apply stratified sampling?
Heterogeneous.
Very good. When the entity has heterogeneous population, you're going to group it into homogeneous characteristics, and there you're going to select the samples. That means what? Entire block is divided into homogeneous components, and they're made in a group called strata. Very good. And from each of the stratum, you're going to select the samples. That is what you're going to do. Next, systematic sampling means what? Systematic sampling is a sampling technique which uses a rule form of a thing, right? For example, you select invoice number 5. After that, every 5th invoice gets selected. So 5. Initial point will be a random number. Let's say I'll start with 32. And then what will be in my next invoice? 32 plus 5, 37. 37 plus 5, 42. Like that, it goes on. It follows a systematic pattern. But what is the problem? The problem is that misstatement could be there amongst the items which is in between the selection. And if the management identifies this pattern, they will try to put everything, push everything under the carpet which does not get selected. So this is very, very risky. You need to take it appropriately. What else do we have? Monetary unit sampling, right? What does you mean by monetary unit sampling? It's a value weighted selection. That means what? You are going to select the items based on the monetary value. So no, monetary value is what you're going to take into consideration. Next, haphazard selection. That means what? The auditor is not going to deploy or apply systematic process. Just like that, he's going to select the samples. Actually, haphazard sampling is not a sampling at all. If you ask me, there is no structured approach to it. And then lastly, what do we have? Block sampling. Block sampling means what? You're going to divide the population into blocks, contiguous items. That means what? Items which are sitting next to each other, whether they have audit relevance or not, you're going to make it into one group and select these items. For example, 1 to 10, day 1 to day 10, whatever other transactions, it forms one block. Day 10 to day 20 forms another block. Day 30 to day 40 forms another block. And from each of the block, you're going to select the samples. Now, that means what? Sampling is of two nature. One is statistical sampling and the other one is non-statistical sampling. What do you mean by statistical sampling? The use of concept of probability. Here you're going to use the element of probability, and it also gives you what? Calculated sampling risk. Right? It is going to help you to identify what is the sampling risk. These two conditions needs to be present to call it as a statistical sampling. Non-statistical sampling is based on the auditor's personal judgment. See, it's not always right to say that statistical sampling is the best one. See, for certain classes of transaction or account balances, auditor's personal experience gives you better methodology than a sampling. And sampling will not be used in certain areas. For example, complex transactions or items where the auditor expects a lot of material misstatement to exist, statutory payments, all these things, auditor would probably do a 100% verification to obtain the comfort level. Understood? These are the methods that we have identified in the sampling. So majority of your time goes in what? Projecting the misstatements. Interestingly, for test of controls, there is no explicit projection. Yes or no? Why? Because if a particular control is not working in a sample, it will not work for a population also. So when we say the rate of deviation, rate itself is in a comparable format. You cannot convert it again. It's say you have identified 5% deviation. Then you can't say 5%. I have identified 100 units, 5 to 100, 500% deviation is there. No, you cannot say that. Understood? This is what we have understood in the sampling. Then what did we do? Understood? We understood the important concepts of SF 510. Am I going too fast or?
Yes.
No. So what is SF 510?
Initial audit engagements and opening balance.
Very good. When is the standard applicable?
In previously audited.
Very good. When the financial statements were audited by a predecessor auditor. Very good. Or when the financial statements were not at all audited. In these situations, the standard SF 510 comes into picture. What are you supposed to ensure? You're supposed to ensure that the opening balances are proper. The opening balances have been properly brought forward from the previous years. The accounting policies or the principles which are applied in the opening balances are consistently applied in the current year. Now, if there is any deviation, whether the deviation is appropriately recorded in the financial statements and disclosed, is what as an auditor you need to check. What else are you going to check? If there is a misstatement in your opening balance, how the auditor is going to deal with that. If there is a misstatement in the opening balance, how will the auditor address that? 2 arrow marks.
Whether it is resolved in the current year.
Very good.
Or not resolved.
Very good. Whether the misstatement, the matter which arose to a misstatement, has it been resolved or not? If it is resolved, then there is no problem. If the matter is not resolved, what is he supposed to do? Is to consider the implications on his audit and see whether is there a need for him to modify the opinion for the current year. This standard also has a link to your SA 710. Corresponding figures and comparative financial information. Corresponding figures, let's say there is a misstatement, how are you going to address? And also, if you are auditing the financial statements for the first time, where the opening balances have been brought forwarded from the previous years, if you want to emphasize this matter, how are you going to do that? How are you going to draw this in the audit report? By providing other matter paragraphs. You can't give EOM. Why? It's not reported in the financial statement. So you have to provide in other matter paragraph. Let's say the previous financial statements are not at all audited. How are you going to do it? You draw the reference of, you draw the attention of the users to this fact that it was not audited, and have taken the opening balances from the unaudited financial statements. Now, if the auditor is unable to obtain any evidence on the opening balances, he need to consider the impact, rather possible impact. Now, if the possible impact is material, he is going to give a what opinion? Modified. Under modified, what type of modified opinion is it? Very good. He's going to give a qualified opinion. If the possible effects are material and pervasive, what opinion is he going to give?
Adverse.
Adverse. Very good. But the answer is wrong. Why? I said the possible effects. When the possible effects are material and pervasive, since you are unable to obtain sufficient and appropriate audit evidence, you need to disclaim yourself from giving an opinion. So you have to give disclaimer of opinion. This is the connection of your essay 510. Sorry, essay, correct, essay 510. Understood? Yes. Then we understood essay 570, which is very important. What does essay 570 talk about?
Going concern.
Going concern. This is one of the fundamental accounting assumptions that is embedded in the preparation of the financial statements. As an auditor, what are you supposed to do? What is your responsibility here? What is your responsibility? Don't put awkward silences in between. What is the objective in essay 570?
Should obtain sufficient and appropriate audit evidences that the uncertainty doesn't exist, or if it exists, the management should disclose it.
Very good. First, the auditor needs to obtain sufficient appropriate audit evidence with regard to the management's use of going concern assumption. Right? Whether the management's use of going concern assumption is appropriate in the circumstances. Second point, auditor needs to identify whether a material uncertainty exists in the entity. If there is any material uncertainty, then how the management is addressing, how is it disclosing? That is what you're going to do. What do you mean by material uncertainty?
Events or conditions that may cast significant doubt on the entity's ability to continue as a going concern.
Very good. Events or conditions that may cast a significant doubt on the entity's ability to continue as a going concern. Now, what are the examples? We can classify it into 3 buckets. What are they?
Financial,
operating, and others.
Very good. Financial, operating, and others. Don't get confused with your cash flow statements. Operating means what? Something to do with your operations. Huge labor attrition, lot of strike, loss of a key customer, entrant of a new competitor in the market. Financial is what? Negative key ratios, negative cash flows, adverse financial adverse financial ratios, right? Huge liability position, net liability position is very, very huge. All these are the indications of the financial aspects which is making the entity to have a material uncertainty. Others are what? Certain regulatory requirements is making an entity's ability to continue going concern under jeopardy. All of them are the examples. So I've told you, please remember at least 4 examples under each situation. Yes or no? Then what did we discuss? Whenever there is a material uncertainty, what the auditor is required to do, identify those factors which has caused such an uncertainty and inquire the management on their assessment. So when you inquire, you may get typically 2 answers. One as yes, one as no. If management has not at all assessed the entity's ability to continue as going concern and the material uncertainty, what are you supposed to do? You have to inform it to the management that please perform the assessment. Now, we have already performed. What are you supposed to do?
Evaluate.
Very good. Evaluate the management's assessment of such material uncertainty. Now, if it involves the use of the projections, discounted cash flows as an important factor, what the auditor is required to do is required to test the assumptions behind such projections, the reliability of those information, and the auditor is also required to evaluate whether the management's plans of actions are realistic in nature. Yes, sir. Are you all able to remember these concepts that we have discussed? He's supposed to check whether their plans are realistic. Now, whether the plans are going to improvise their situation or is it going to be the same way? These are the factors that you need to take into consideration. Now, let's come to the reporting aspect. Now, if the auditor has already identified a material uncertainty, now what is he supposed to do? He's supposed to check whether the management has appropriately disclosed the fact in the financial statements. Yes or no? If the management has disclosed the material uncertainty and if it is in the auditor's view appropriate, what is the auditor required to give? What type of opinion?
Modified.
Unmodified.
Very good. He's supposed to give an unmodified opinion. That means what? Clean opinion. And he need to draw emphasis of matter paragraph in his auditor's report. Yes or no? Agree?
Yes, sir.
No, you are not right. Why? Because we have discussed this clearly. Emphasis of matter paragraph is not a substitute for your going concern. We have a separate paragraph dedicated to it. What is that paragraph? Material uncertainty on the going concern. You need to mention that fact and you need to clearly say our opinion is not modified in this respect. But the entity's going concern assumption is appropriate. When the going concern assumption is appropriate, but a material uncertainty exists and management has not disclosed that appropriately in the financial statements, how the auditor is supposed to respond?
Qualified or adverse opinion.
Very good. He need to consider whether such an impact is material or material and pervasive. If it is material, he is going to give a qualified opinion. If it is material and pervasive, he is going to give a
adverse opinion.
Give an adverse opinion. Third situation is what? When the management's use of going concern assumption is inappropriate. What opinion is he going to give?
Adverse opinion.
Adverse
Very
opinion.
good. Straight away, he's going to give what? Adverse opinion. These are the aspects that you need to cover in your essay 570. Then let's take a detour. Let's come to essay 5. No, we'll cover essay 560. What is essay 560 talking about?
Subsequent event.
Very good. Subsequent events. What do you mean by a subsequent event?
An event occurring after the date of the balance sheet till the audit report is signed.
Very good. And information that the auditor obtains after providing the audit report. We draw our line chart, right? Remember, the subsequent events are those events and conditions that occur between the date of the financial statements till the date the audit report is signed and the information that the auditor is aware of after signing the audit report. It is got a close connection with your accounting standard
4.
AS4.
AS4, which talks about events occurring after balance sheet date. Right? So, but your AS4 stops till the time the financial statements are signed, but SA 560 continues till the audit report is signed. So, in order to avoid this practical difficulty, what do? We practice that the audit report is signed on the day when the financial statements are signed. Now, the fact is very, very clear that auditor is no longer liable or obligated to perform any audit procedure with after the audit report is signed. Yes or no? This factor is very, very clear. Now, AS4 has an event categorized into two parts. What are they? Adjusting events and non-adjusting events. What are adjusting events? Events which had the conditions existed at the balance sheet date and requires amendment or an addition or an impact in the financial statements. What is the classic example? There is a debtor as of 31st of March where his position proved to be very, very weak. 1st of April, the court adjudicates that guy as insolvent. Now, what are you supposed to do? You're supposed to come back and write the debt as bad. This is an adjusting event. Understood? Same way in audit also, there could be matters where the auditor would have given a different opinion if he had come to this knowledge of the information. That's how we classify. Now, if he has identified such a factor, what is he supposed to do? He's supposed to discuss that with the management, and where appropriate, those charged with governance, the matters or the events that arose to such a situation. Second, he need to consider whether the financial statements requires amendment. Now, if the auditor considers that the financial statements require amendment, what is he supposed to do? He's supposed to again discuss the matter with the management to see how they are going to address such a situation. Now, there could be two things. The financial statements are already disseminated to users. Second, the financial statements are not yet published. Now, if the financial statements are already published, what is it supposed to do? The entity is supposed to send another communication and inform them the fact that the financial statements might undergo a change. But our requirement, that is your Indian laws, does not allow you to amend financial statements just like that. You see, there is a particular section, reopening or revision of accounts. You see, it is not unconditional. There are a lot of actions that you need to take. Only then you can reopen the financial statements. Now, if the audit report is already signed and it has come to his attention, what is he supposed to do? He is supposed to same thing, discuss that with the management and consider whether the financial statements require amendment. If so, how the management is going to address. And if it is already disseminated, he need to, not the auditor, the entity needs to convey the fact that the financial statements is subject to this particular event. Understood? So this is what we have got an understanding of SA 560. Then we came to SA 550, which is very, very important, related party transactions. See, who is a related party? If applicable, financial reporting framework gives sufficient details or the guiding principles, that person will be a related party. If not, generally, how do we classify? What do we call a person as a related party? When he is able to exert some amount or some sort of influence or the control on your organization. What are the simple examples? Holding company, subsidiary companies, associate entities, or fellow subsidiary. That means what? I am held by a particular entity. That same entity is holding another entity. We two become what? Entities under common control. We both become related parties. Key managerial personnel, directors, and their immediate relatives become the related parties. Now, as an auditor, you need to obtain sufficient appropriate audit evidence that these transactions with the related parties are appropriately disclosed in the financial statements in accordance with AFRF. That means what? Essentially, AS 18 compliance. Second point, the entity, whether the related party transactions are appropriately authorized, approved by the respective heads. It could be those charged with governance, or it could be members in the case of a company. Third point, whether these transactions with the related parties are so significant and complex in nature that it is falling outside the entity's normal course of business. Auditor needs to understand, and there could be certain transactions with the parties which may pose substance over form questions. Why are you doing all these things? See, it does not make any sense to have the money getting routed through various entities and again coming back to you. But why are they doing? There could be some motive behind it. As an auditor, you need to be aware of this factor. Now, what are the guiding principles? Audit procedures you need to perform to ensure that there is a system that the entity follows to identify all the related parties. How can you obtain this information? What are the areas that you are going to check to obtain the information of the related parties?
Minutes of the meeting.
Very good. Minutes of the meeting.
Investments in balance sheet.
Very good. The entity's investment structure is what you need to understand. Same way, entities share capital. That means what? How the entity is structured and what are the entity's investments to understand the holding company, subsidiary company, associate company related activities.
Register of members.
Very good. Entities register of members to identify who are the significant shareholders and what are the transactions with them. Previous financial statements, right? Because in the previous financial statements, the entity would have already identified certain related parties to see whether the same is continued in the current financial year. Let's say last year there were 5 related parties. This time they're saying only 4. Why? what happened to that one party who you had considered it as related party? Does it cease to be a related party or not is what you need to check. And entities latest income tax returns. Why in income tax returns a lot of information about related parties are provided. Yes or no? What else are we going to understand in related parties? That aspect where entities transactions are in outside the entity's normal course of business. That point is important in your 550 standard. Are we all there? Ella full tension madkonbidira. Why your expressions are so sad, so gloomy? I'm not discussing anything new here. Am I? No. Okay. So we cover these many standards, right? SA 520. What do you mean by SA 520? Analytical procedures used as substantive procedures. That's why it's called substantive analytical procedures. So if the use of analytical procedure is based on certain factors, what are the factors?
Spenda.
Very good. Spenda. What is Spenda? What is S?
Source.
Source, right? The use of analytical procedure is definitely affected by the source of the data. Source, you already know what are the sources from where the data can be obtained. Then
Predictability.
very good. Predictability. What is predictability? Analytical procedure is more applicable for the data or the items which tend to be predictable over time. That means what? Your class of transactions are more appropriate than your account balance, because account balance is just the position that you have. But class of transactions mean rent. For example, if you know that the rent expense of the entity is 1 lakh per month, you can predict what could be the rent expense for the subsequent 12 months. Considering the factor escalation clause, you will identify this could be the probable rental expense that needs to be debited in the P&L account. Yes or no? That is what you are going to do. Then Spain. Very good. The extent of analytical procedures is directly affected by the availability of the data. The more the data you are available with, the more the analysis that you can perform. Then I talked about
inherent risk.
Very good. Inherent risk. The element of inherent risk plays an important role. Now, if the item is extremely risky, what will you do? The analytical procedure use will not be appropriate, because inherently that item is risky. Let me not take any chance there. That is what you're going to do. SPAI. N. What is N?
Nature.
What is nature of
Assertion.
What do you mean by nature of assertion?
Type of assertion that it is subject to.
What is it? Whether it is a class of transaction, account balance, or PD. That means what? Analytical procedures are more applicable for account balances than class of transactions. Yes or no? Okay, most of us are already sleeping by now. It is more applicable for class of transactions than account balances, because class of transactions tends to be more predictable. Then what? D. What do you mean by D?
Disaggregation.
Very good. Disaggregation of data. What do you mean by disaggregation of data? Disaggregation of data simply means to what extent can you decipher the data into subcomponents. Total employee benefit expenses, if I give, it is very difficult. If I break it down into salaries and wages, contributions to employee welfare funds, then if I also give you what is staff welfare, then under salaries and wages, basic, DA, HRA, allowances. If I give you more and more breakup, you can perform more and more analysis. Got it? Then what else do we have?
Account type.
Account type. Again, what do you mean by account type? It is applicable for those items which are having the element of predictability than the other items. These are the factors that is going to have an impact on your analytical procedure. Now, what are the tools that you are going to use?
Trend analysis, ratio analysis.
Structure modeling, craze numbers test.
Very good. Trend analysis means what? Comparison with the prior year's numbers. That is what is called trend analysis. Then ratio analysis means what? Comparing the data amongst themselves within the same financial year. Current ratio, quick ratio, then debt equity ratio, return on capital employed. See, understanding this, your schedule 3 itself has now amended to to ensure that entity provides key ratios and then reasons for the variation. Everything needs to be given in the financial statements. Then what structured modeling means? What you're going to prepare a model based on certain statistical and mathematical tools, and you're going to apply it in your audit, right? Reasonableness test means what? Whether that particular expense sounds reasonable. Now, during COVID times, which entity is allowed to travel? I mean, which employees are allowed to travel? Traveling expenses are so huge. Is it reasonable to what the economic situation currently is? No, sir. Everywhere lockdowns were imposed. ನೀವೇಂಗ್ ಸರ್ ಟ್ರಾವೆಲ್ ಮಾಡ್ತಾ ಇದ್ದೀರಾ, ಊರು ಹೆಂಗ್ ಸುತ್ತಾ ಇದ್ದೀರಾ ಅಂತ ಕ್ವೆಶ್ಚನ್ ಕೇಳಕ್ಕೆ ಹೇಳ್ತಿರ್ತಾನೆ, right? During COVID, no, almost the traveling expenses would have become zero. A lot of IT companies have, what we have experienced is traveling expenses have become so negligible compared to the size of the entity. So that's reasonable, right? So that reasonableness test is what you're going to perform. What else did we understood in the substantive analytical procedure? Substantive analytical procedures are normally performed at the end of the year, which helps the auditor to take the overall conclusions on the financial statements, right? Now, if the auditor assesses the risk of material misstatement to be higher, will he do substantive analytical procedure? ಇದೇನದು ನೋ ಎಷ್ಟು ಹೇಳಕ್ಕಾಗಲ್ಲ ನಿಮ್ಗೆ?
No, sir.
No, sir.
ಹೇಳಕ್ಕಾಗಲ್ವಾ?
No, sir. For the
Answer
no, sir.
Okay, the answer is what? The answer is
No.
no. He is going to do more of test of details. When he has already assessed that there is a lot of risk involved, he will not do analytical procedure. Why? Analytical procedure takes into consideration data at a very large level. It is just going to give a bird's eye view. So he don't want to take any risks. Now, what else is important under analytical procedure? Expectation, developing an expectation. What do you mean by expectation? What do you mean by expectation? See, when you perform your analytical procedure, you will have some number. That is what you expect that to be there in the financial statements. Now, let's say rent expense. I have seen the entity's rent expense the last year. It was 20 lakh rupees. This year, considering the general escalation level, I feel that 5% is what is normal. So 20 lakh into 105% should be the rent expense this year. So you compare what is the rent expense which is actually debited and see whether that has a huge variation. Here, very importantly, auditor is also supposed to consider what is reasonable. There will definitely be a deviation from the expectation. Whether the deviation is reasonable, acceptable is what auditor should understand. So there he uses something called as precision level. Yes or no? This is the word that we have used in SA 520. So that is what he's going to do. Now, if auditor has identified a lot of divergent amounts, that means there is a lot of variation, he's going to inquire, discuss with the management for those reasons why it has caused that variation and see whether the reasons given by the management is reasonable and justifiable. This is what he's going to do. Understood? Clear?
Yes.
So with this, we complete most of the SA 500 series. Yes or no? What else is left? SA 501 is left. Two aspects, litigations and segment reporting. Right. So now let's come back to SA 240, which is an isolated standard. You can read that separately. What do you mean by this? The fraud? Nan mukha nodbedi, nan fraud alla. Fraud andre, see, if it is an offline class, if I'm sitting like this, assuming there's one Shetty sir says, so what do you mean by fraud? Everybody turns to me. All of you will turn to me, right? That is what you're going to do. What do you mean by fraud?
Intention to
Sir, will turn.
Intention? Any
Intentional act to deceive.
Very good. Intentional act with a view to gain illegal or unjust advantage. So there is an element of deception. That means what? You're going to do what? What are you going to do? You're going to conceal it. Right? You're going to conceal. You means the client or the management is going to conceal that they have done the fraud. See, that's why if you're copying in examination, you should have the skill not to get caught. Right? Cheaty ella barkondu hogre copy gotaga tara yaru barkonalla cheaty. So you should have the skill. Only then you can do that activity. Now, fraud can be of two types. What are they? Aditi, don't be sad. You have not done any fraud. If you are sad, that means you have done some fraud. What are the two types of fraud? Fast.
Fraudulent
financial reporting and misappropriation of assets.
Very good. Fraudulent financial reporting and misappropriation of assets. Fraudulent financial reporting is normally accompanied by what? By three things. MMI. M means what? Manipulation of accounts. Falsification, misrepresentation of the facts, and intentional misapplication of accounting principles. Right? So fraudulent financial reporting is normally done at the management cadre because they are in the position to override the controls and do the fraud. Now, fraudulent financial reporting is done normally by overriding controls. What are the techniques that the management is going to use?
Complex transactions.
Very good. Traffic
points.
Traffic jam clear agbeku. Traffic points. What do you mean by T? Engaging in
Transactions.
R stands for what? Delaying or advancing the recognition of revenues or items in the financial statements. A talks about what?
Altering the records.
Right. I talks about what? F talks about
fictitious journal entry.
Passing fictitious journal entries. Maya. Ella mayavo anta ella mayavagide. Financial statement alli yavudu naijavalla. Next. I talks about what?
Inappropriate adjustment assumptions.
Inappropriately adjusting the assumptions. Fee for weighted average ಮಾಡೋದು, weighted average na fee for ಮಾಡೋದು, SLM WTV ಎಲ್ಲ ಅವ್ರಿಗೆ ಬೇಕಾದಂಗೆ ಮಾಡೋದು. Fair valuation ಇಂದ revaluation ಇಂದ cost ಮಾಡೋದು, cost ಮಾಡೋದ್ರಿಂದ revaluation ಮಾಡೋದು. Current investments non current ನ current. ಪಾಪ ಏನೋ ಆಗ್ಬಿಟ್ಟಿರ್ಬೇಕು ಇವತ್ತು ಅಂತ ಅನ್ಕೊಂತಾ ಇದೀರಾ? This is what you are going to do. Then what is last? C. Concealing or not disclosing the facts. So we have also used the word obscuring. So if the financial statements are obscuring, it is considered to be wrong thing. These are the points. Now, misappropriation of asset is normally done at the employee level, right? It is often accompanied by misappropriating goods or funds.
Defalcation of cash.
Very good. Defalcation of cash. Misappropriation of goods is normally done by what? By stealing, causing the entity to pay for the goods which they did not receive, and then using the entity's assets for personal purposes. What else are covered there? What else is there? That's all. Then defalcation of cash is done either by suppressing the receipts or inflating the payments. Suppressing the receipts means what? You're not showing the receipts of cash. Why? Because it is swahad already. So suppressing the receipts is done by what? One important technique called teaming and ladding. Teaming and ladding means what? The receipt which is received from
the previous fraud
adjusted to the previous account. The amount that is so received is misappropriated. This activity is continued till the amount is flowed back into the entity. Now, what is the reason? The reason is inappropriately the reconciliations are not happening on a timely basis, right? So this is what we have understood under defalcation of cash. Inflating the payments means what? Dummy entries, right? Making the entity for dummy payments. You are making payments without having that actual expense. Adjusting the vouchers and making the entity to pay more than what the expenses incurred, right? And suppressing the receipts, not recording the cash sales completely. Writing off the amount as bad debt. Subsequently, when the amount is received, that is misappropriated. These are all the techniques that you are going to use. I am not teaching what you should do. I am telling this is what they will do. You need to be very, very careful. Now, this fraud is committed because of various reasons. And these reasons are called fraud risk factors. What are the fraud risk factors?
Nature, by their nature.
No, incentives or pressures, attitudes or
opportunities,
opportunity.
Rationalization.
Rationalization of act. Incentives or pressures means what? There is some avenue for you to commit this fraud. Let's say you are working in an entity which has huge cash transactions. You are primarily enticed to take this cash. Ayo, gold or organization. I mean, this gold jewelry organization. Ayo, you are one the Nanu money gram. 500 grams, like bringing 500 grams of rice. This guy has brought 500 grams of gold to his home. So that is an incentive. Pressure means what? Management is at the pressure to report higher revenues. Otherwise, investors will start questioning them, or they want to remain in the top. Stock market, only their entities' prices should always be at the first. So they want to inflate. They want to have higher profits. That could be their motive. Attitudes or rationalization means what? Krishnane obba dodda kalla. Now you're finding reasons. You're finding reasons for this act. Or some people will themselves have the attitude of justifying their acts. That is attitudes or rationalization. Opportunities means what? Lack of internal control, lack of segregation of duty. When the employee of the organization has too many powers, or when he is there for a very long time and he knows the deficiencies in these controls, that gives him an opportunity to do the fraud. Or when those charged with governance does not have a sound code of ethics in place. This is what we call it as opportunities or rationalization. Opportunities, right? These are the fraud risk factors. Now, very important, what are we supposed to do? We're supposed to understand what happens if the auditor encounters an exceptional situation. When he's not able to continue, he's going to consider the professional responsibilities, including the reporting objectives, right? So he's going to consider whether this aspect has any reporting responsibility. That means what? 143 subsection 12, read with rule 13. Right? So that is what he's going to consider. Secondly, what is he going to do? If he's unable to continue the engagement, he's going to withdraw. Before withdrawing, communicate with those charged with governance or any other personnel the fact why you are withdrawing from the engagement. And lastly, withdraw from the engagement wherever permissible, wherever possible, and see whether this withdrawal needs to be reported, like resignation of auditors, right? In your case of a company, needs to be reported. Very importantly, 143 subsection 12, reporting responsibilities of auditor needs to be considered. When the auditor is required to report the fraud, when the fraud exceeds individually, very important, individually the fraud exceeds 1 crore rupees. To whom is he supposed to?
Management and those charged with
management and those charged with governance, board of directors actually, and then he has to seek the reply from them within the next 45 days. If he has not received it within the next 15 days, he is supposed to report it to the central government in form ADT 4. Right? So the 4 fraud, ನನ್ನ ಹೆಸರು ಎಸ್ ಇದೆ, ಏನಾದ್ರು ಎಫ್ ಇಂದ ಫರ್ಹಾನ್ ಇದ್ರೆ ಇನ್ನೂ ಖುಷಿ ಆಗೋಗ್ತೈತೆ ಎಲ್ಲರಿಗೂ. ಎಲ್ಲವೂ ಲಿಂಕ್ ಆಗೋಗಿದೆ, ಕೊರಾಬರೇಟ್ ಮಾಡ್ತಾ ಇದೆ. Rahul is thinking that only. I will get an affidavit and change my name, Rahul, don't worry. Okay. So with this, we complete the fraud and its allied concepts. Okay. I know it's not going to be so in detail, so much of the things we have discussed in the class. This is just a glimpse of what we have understood. It's like droplets. Right? So I hope these 2 days revision sessions have been helpful for you. Don't think that this is it. We are going to have the revisions in the future also, but the fact is you need to read on a continuous basis so that you would be able to match to the pace that we are at the moment. Okay, so with this we complete 2 days of R2E. It was refreshing and relaxing for me. I hope it was the case with you also, right?
Yes, sir.
From the past 2 hours in class, at least I would make you to read. Now that is also not there. Whatever be the case, I hope these sessions were helpful. Please let me know if you have any questions in our class. I'm very sorry, Chandramoli, I did not dodge your question. Please park your question in the class. I will give you the clarification. Okay, so you enjoy your day. Have a happy festival. Proper nice food you eat. The leftover food of the afternoon you eat properly, only if you have not eaten, because some of you have already started eating in the class, and don't sleep. Why? Because you've already slept in my class. Thank you. Have a nice day. Bye. Good night.
Thank you, sir.
Bye, sir.
Thank you.
Bye.
Thank you, sir.
Sir.
Bye. Bye.
Bye, sir.
Bye. Enjoy.